So if you live in Toronto, you probably think Canada's housing market is in a deep slump. Prices are down, homes just are sitting on the market, and buyers have largely disappeared. But here's the thing, this is not really a national story. Ontario and BC are struggling, but the rest of Canada is actually doing relatively well. And in some areas, they're in seller's market territory. So what is going on? Why are high interest rates impacting some segments of the country, Ontario and BC in particular, and not others? That's what I wanted to chat about today. My name is John Pisalis. My team and I help buyers and sellers throughout the Toronto area make smarter real estate decisions. If you're buying, selling, and would like to meet with me and my team, just click the link in the show notes below, or you can send me an email at askjohn@movesmartly.com. So as we talked about, I think when we live in Toronto, at least, we tend to have a very Toronto-centric lens in view of what is going on in housing. And a lot of times people assume that this is going on across Canada. But as I said in our intro, as we set this up, it is not necessarily the case. If we look at the data, and in particular, how home prices have evolved since the peak in March 2022, what we can see are some very interesting trends. Average home prices in Ontario are down 20% from the peak. BC, I'm looking at my numbers, 18%. Whereas in many of the other provinces, prices are actually trending up. Alberta's up 11% since the peak, Quebec 9%, and Nova Scotia 1%. They've been trending up, so they fell after the market kind of collapsed, but have largely rebounded all of those losses and are basically flat compared to the peak in March 2022. So what is going on here? Why, if this story is about high rates putting strain on households and keeping prices low, what is happening here? And there are multiple things going on. I mean, number one, if we kind of look back, Ontario and BC are some of the regions in Canada that saw the most rapid increase in home prices. And of course, the higher you rise, a lot of times the harder you fall. So certainly the rapid run up during COVID is one of the factors. The second factor, of course, is that Ontario and BC are among the most unaffordable regions. When we compare house prices in Quebec, where they're rising, and in Alberta, and even in the Maritimes, homes are way more affordable. So buyers are not as limited in those markets to buy home. Home prices in the Toronto areas here are still 9+ times household income. That's not the case in many of those other regions. So the fact that homes are more affordable means the higher rates are having a smaller impact, or not as significant an impact, on housing affordability in those regions. So buyers can still be active. And like I said, in some of those regions, it's actually seller market. Prices are trending up even over last year. So certainly the price level is another factor. And the third factor, I think, and one that is very important, is leverage. And certainly in provinces like Ontario, we probably had among the most leveraged households, meaning households with the most debt. There were such a high number of people who were going out and buying multiple properties, multiple investment properties, loading up on debt, assuming price would keep rising forever. It's this added debt burden that is really weighing on a lot of Ontario households and making it harder for them to adapt and adjust to this higher interest rate environment. And we can see this when we look at arrears data. So Hannah from WOW just published an article in the Globe and Mail showing RBC data showing 90 days, the percentage of their mortgages that are 90 days in arrears, so 90 days late on their mortgage payments effectively. And it showed some very interesting trends. And the most important one, I think, is that arrears are surging in Toronto. I think in 2023, I'm just looking at the charts, the data now. I mean, we were at 0.05% of the mortgages were in arrears. Today, Toronto is at 0.4%. So they have skyrocketed over the past 2 years. And Toronto, or the greater Toronto area, is actually outpacing the national average when it comes to arrears. Vancouver, interestingly, is not. They're actually behind the national average. So again, likely a segment of the population, though, even though prices were high, less leverage than we were here in Ontario. And it is these arrears, again, if you're behind on your mortgage, this puts pressure on the housing market. Many of these people are forced to sell. This leads to potentially some distressed sales. And I think this is one of the most important things that we need to keep in mind on. I mean, the first, of course, is that there are no national trends and we need to be looking at the local dynamics. But the more important issue here is that, you know, the real risk in Ontario and the Toronto area isn't just falling prices. It's really this financial strain on these highly leveraged households. And that's what really makes this slowdown that we're experiencing now quite different from slowdowns we've seen in the past. In the past, when we had these slow cycles and lower interest rates resulted in this massive boom right after. This is likely why we're probably not going to be seeing that. And I've been talking about this, especially with David LaRocque on our live monthly updates, which we do once a month on the second Thursday of every month. Why, even if we start to get lower rates, and we probably will over the next 6 months, yeah, it might stimulate some demand, but it's likely not going to trigger this massive rebound that some sellers are hoping for because we have these underlying financial strains on households on this rapid increase in households in arrears, and this is going to weigh on the market, and it's probably going to result in, again, probably in some distressed sales as we move into the next 6 to 12 months. So I think it's going to be, of course, an important trend to be keeping an eye on how arrears are changing over time and how that's flowing through into the housing market in terms of rising inventory and potentially more distressed and pressured sellers who need to sell at significant discounts because they cannot hold on to their property. So we'll keep an eye on that as we're moving on over the next 6 to 12 months. If you have any questions, please post them in the comments below, or you can shoot me an email at askjohn@movesmartly.com.